is the Agency Profit Podcast, the podcast for agency owners that want to run a more profitable business that doesn't depend on them. Introducing your host, CEO and co-founder of Parakeeto, Marcel Pettipaw.
Hello, everyone, and welcome back to the Agency Profit Podcast. Today, we have somewhat of a serial entrepreneur joining us, built and sold 2 agencies, and is particularly interested in productized services, is the author over at Productized.Services, born and raised in Colorado, and now living in Medellin, Colombia, which if you're a Narcos fan like me, you're probably terrified of that place, even though I'm sure it's really beautiful. And today is the founder of tinywords.co, and here to unpack productized services, experience going through acquisition, all kinds of other stuff. I'm really excited to have you on the show, Tyler Gillespie.
Dude, thanks so much for having me, man.
I am pleased to have you here, and I'm really interested in what we're going to talk about today. I've given everyone a little context on you, but before we get into the meat of it, I'll give you an opportunity to describe what you do in your own words.
Yeah, I mean, I've done quite a few different things over the years, but recently, like you had mentioned, built and sold a couple different agencies and realized how important productizing was. So I spent really the last year or so just doing consulting and helping other agency owners better package up what they do, better sell on outcomes and fixed deliverables rather than hours, essentially packaging up and productizing their services. And really enjoyed that. And then just until recently, I was just telling you that I kind of scaled back the consulting and now focused on actually building something again. So really excited about that. I think having a connection to, not only teaching, but doing is really important. So that was something that I've been craving for a little while.
Awesome. And so just to fill in the backstory a little bit, what got you into starting your first agency? How did you find yourself in that position?
Yeah, so I think it's interesting because when I go way back, I was actually always involved in service businesses. My family owned more brick and mortar service businesses in real estate, whether it was property management, vacation rentals, these types of home maintenance. So I was always involved with that model. And then I eventually transitioned online, doing more marketing, etc., and really started my first agency. It's probably, I want to say, 2008 to 2010. It was in doing vacation rental marketing in Colorado. And I guess that would be considered kind of the first agency. We were just doing, it was kind of an arbitrage play, we would handle all the marketing, partner with these, wealthy homeowners, and then any bookings we got, they would give us a commission based on that booking. So that was really kind of the first dabble and the taste of, I guess an agency. And then after that, did some traveling and really wanted to create something that was more disconnected from location. So that was a big part of like my criteria, where can I travel and can I do this from anywhere? So that kind of was a huge step because all I knew before that was, running these service-based businesses and my agency at the time, but it was very geography based and restricted on that specific location where I grew up and lived in Colorado. So I really had to kind of reinvent, and that's when we kind of started more of a full service agency at the beginning, and that was with a buddy of mine. Actually, we had started from a cafe here in Colombia. So that was about 8 years ago. Was that agency, or actually a little longer? It's like 2013. Was when we kind of started that agency.
And so what was that journey like? So you would go on to actually sell that agency. So what was that transition like from moving into a more productized service, having that kind of unlock the business, and then eventually leading you to a place where you were able to exit?
Yeah, so I think it was like right before Christmas is when I finished reading Built to Sell for the third time, and was like, cool, going into the new year, like we're cutting everything, we're saying no to everything, and we're going to actually productize this. So we looked at, cool, what were the most profitable things that we were doing, what had like the least amount of like customer headaches, what was like the funnest to fulfill and somewhat the easiest to fulfill, And we ended up just we whittled it down to like two things. One was like email copywriting, and then blog posts and articles. And we ended up going with blog post and articles. So we kind of just stopped doing everything from funnels to websites to landing pages to copywriting to design. We just literally stripped away everything. And it took, saying no to quite a few customers, and, pretty much doubled down on content writing. And from that point, going into that new year for the next 2 years, it was literally, we just essentially had a kind of a productized offering. There wasn't too much, like, I don't even know if we knew like that was the the wording of what to call it. It was just a very fixed offering. We were just very diligent on saying no to everything that didn't fit into that. So for about a couple of years, we built that up. Ended up building a team of like over 120 writers, and it was about that time when my partner actually at the time mentioned, hey, like, I don't know if you're open to selling this, but like maybe we should explore that opportunity. So that's when we actually started kind of going through some of the steps to see what it could even look like selling it. I don't think either of us even knew at the time if it could be sold, to be honest. But that's kind of was the journey of us kind of building and focusing on the content writing.
So I just want to take a moment to double click on some things, because like your first acquisition experience was certainly unconventional from a timeline perspective, unconventional from a deal flow perspective. Yep. Like clearly unconventional in a lot of ways, but I think you highlighted that there were a lot of things in the business that set you up for that kind of response when you listed it. And you spoke about the systems and the processes and the fact that the business was running without you. And we've done several episodes in the past with brokers and M&A experts, and a lot of them have talked about this, but I think this is a really great example of that actually in practice having a massive impact on your ability to get a deal done, not only fast, but with high competitive leverage, which I'm assuming pushed you to a really good multiple. Also amazing terms. The fact that you had an all cash offer with no earnout, that is very unconventional. Yep. Most of the time, for everyone listening, like, you're not getting all cash up front. You're usually getting a bunch of that in company stock in the company that's acquiring you. And then you've got to stick around for 2, 3, 4 years to earn that and help the transition. So like there are a lot of things that were exceptional about that acquisition, but I think you created that circumstance, to your point, because the business was buttoned up in all the other ways around just the P&L that it was being run. And I think that's a really important thing to call out.
Yeah, no, that's 100% on point. And looking back, there was a lot of things that we did, whether intentionally or not, but like things now in the next startup I started, and then people that I work with, it's like, listen, keep these things top of mind. Like for us, like we had, very low churn comparatively for an agency type business. And it was, mainly because we productized so well. We were out of the business, an hour or two a month is, pretty much, we're off, hands off. We had a great team in place that was running the entire thing for us. They went with the business. So the owners, like, these are things like a buyer investor wants to see. We had, a 3-year track record. We had very decent, I believe, gross profit margins. So like we had a lot of things working in our favor there that a lot of agencies and service businesses, like they couldn't check a lot of those boxes off, which is what leads to lower multiples and earnouts and not cash up front, right?
And so moving on from there, you sell the business. I'm assuming you have some kind of like quarter life or existential crisis because you don't know what to do with yourself anymore. And then naturally you go back and start another business. Yeah. I'm curious, like, what were the learnings that you got from the first business that you applied to the second one, and how did that impact the velocity or the growth of that second business?
Yeah, so learnings, I mean, there might be an interesting one I'll throw at you. Selling the business was awesome. The experience, definitely like, decent amount, not a life-changing amount of money, but, a very good amount of cash, that kind of bankrolls, your next chess moves. But looking back, if I was going to do it again, I probably would have just bought my partner out. I think it's one thing to kind of keep top of mind is like, there's a reason why people buy cash flowing assets because they're very hard to start. from zero. So
Yeah.
I thought that would have been a lot easier to do. So I think that was like one learning for sure. It's like, what do they say? Like rich people sell assets, wealthy people accumulate them.
Yeah.
So that was like one of the learnings. If I was going to go back, I probably would have actually just kept the business because it was honestly 1 hour a month and was cash flowing like crazy. Like,
Yeah.
so, but it was a great learning experience. So that was like one thing I think to consider if you have an agency or a listener has an agency and they want to sell, like maybe just kind of looking at that a little bit more and, especially if you've got a good cash flowing machine kind of going.
Hey, it's Marcel here, and I hope you're enjoying the episode so far. If you are, then I want to encourage you to check out the Agency Profitability Toolkit. It's a free set of resources that we've put together to help agency owners just like you improve their profitability. It's full of free checklists, templates, and training videos, and has helped thousands of agencies get better at measuring the essentials of their business. So if you want to grab a free copy of that, you can head to parakeeto.com/toolkit or look for a link wherever you're watching or listening to this. With that, I want to thank you again for tuning in, and I'll let you get back to the episode. Well, and I think I want to pause on that for a moment because it's a really, really great point. And, I recently read the book Buy Then Build by Walker Diebel, which is a great book. And he makes a really great data-backed case that's real. And I know this because, I myself am an entrepreneur. I'm in the agency space. I'm also in the SaaS space where this is even more real. The risk around product market fit is substantial, no matter how competent you are as an entrepreneur. Like, it can take you years to just really figure out the nuances of product market fit, even if you have a clear problem that's dramatically underserved. And this is our story at Parakeeto. Like, I won't let anybody tell me that my co-founder Ben and I are not extremely smart, confident entrepreneurs. I know we are, but it still took us 3 years to find product market fit, and they were painful years. And then once you find it, the growth is astronomical. And I think this is probably the same thing that you ran into with kind of getting into productization. It probably wasn't an overnight success, but once you started to find product market fit, then things accelerated dramatically. And so, Austin makes a good case in that book for, like, if you just look at the stats, if you can purchase a business that's already got product market fit, you circumvent the majority of the risk that gets lumped into all the statistics you hear about entrepreneurship where like 98% of people fail. Well, it's like, well, actually, when you just trim away that bottom 90% of businesses that never make it past, even just like mid 6-figure revenue, and have actually got some semblance of product market fit, the failure rates are substantially lower. So I think you make a great point where it's like selling is sexy. It's a great end to the story. It's, a badge of honor that entrepreneurs want. And the idea of getting a big check and being able to chill is nice. But if the long-term vision is to build wealth, then you're right. You might be better off just holding the thing and then optimizing it.
Absolutely. Yeah. And I think like when you have a partner as well, in a business, like there's more complexities in like the decisions and like what's happening there. So, I don't regret it in any way, but, looking back, that was definitely like one of the learnings that I had, as I build future businesses, when it comes time to sell, really evaluating that a little bit more.
I would be willing to bet that because a lot of the same principles that you had in this first business of, having decent systems, having a good process, like made that kind of a colloquial acquisition situation, like it sounds like a really casual thing. And of course, the transaction of that magnitude is never casual, but as casual as it can be, given that there's not all of this additional work that you would have had to do to actually make that transition possible and to be able to hand the business off to somebody. Am I incorrect in that assumption, Tyler?
No, you're 100% right. Yeah, I mean, there was a lot of, essentially, I've developed some sort of playbook, I guess, but, I have an outline of like, cool, here's all the things you need to do if you're going to build a service business that's going to make it attractive for an investor. And like that checklist is essentially like what I try to work through as far as like the items that if you do all of these over a period of 1, 2, 3 years, your business is the multiple you're going to get on your business is going to be drastically different. So I was able to implement a lot of those things, and that obviously made the acquisition. I think that particular acquisition, Sam ended up buying it, rolling in the customers and the product into Testimonial Heroes. So he ended up just kind of shutting down, or not rolling with the brand, but kind of acquired customers and then my video editors and everything as well. So It was kind of, I think, a mix of talent acquisition but he did get some customers and revenue from it too, I believe.
So now that we've dangled that carrot, let's open up that door. What is the checklist in your mind at a high level?
There's quite a few things. I think, we can dive into a couple of these, and I can kind of run through them if you want. There's about 14 of them, so I'll just rattle off a few that could be good. So first one that we look for is what I call the laptop test. So the idea is, if you were to close your laptop today, like, how long would your business last without you? So an investor, and that's like a very important point for an investor, because if they're going to buy your business, and this is like a huge factor in like what determines if you're going to have a large or long earnout, because it's a risk. Is someone going to buy your business, and it's going to require a ton of time, or they're going to have to hire another operator? But if you have all the systems in place where you could at least close your laptop and it runs through a full month cycle of billing and issues and etc., so that 30-day mark, you've got a pretty solid business that is going to be really, really attractive to investors. Another one is income diversity. So you'll see a lot of agencies and service businesses like not having like a balanced flow of income, where a majority of income might come from, let's say, a few whales, where if one of those customers leaves, that's going to be a huge, negative to the business. So an investor looking at that, that's a huge risk. And that might be another reason for them to put a longer earnout, because they want to protect against the downside of, someone who, contributes more than 50% of your revenue, or 40%, ends up leaving. I mean, that drastically changes the economics of the business, right? So that's one. Let's see here. We talked a little bit about gross margins as well. I mean, I think you had mentioned, I think pre-call, if you can be at that 80%, that's like awesome. And I think it's definitely doable for a lot of service businesses. I kind of put that 60 to 65% gross profit margin rule in.
Yeah. I mean, honestly, like, benchmarking wise, anything south of 50, you're doing pretty good. You're in a position to have a decent EBITDA.
Yeah. So that's something to look at. And then I think another one, competitive moat, team of vested A players. There's quite a few here that we can kind of go through, but those are like, and then obviously, I put aged for at least 3 years. I think that's important too when investors are looking to buy something. Like, has it weathered a few storms? Has it been around for a little bit? You see a lot of people building something and flipping stuff very quickly, which could, in many cases, just not give it confidence to an investor as well. So, but yeah, I can actually include this little checklist as a little bonus if you want after the episode. You can link in the show notes.
There we go. All right. Well, yeah, let's do that. We'll have that linked up in the show notes. So if you want to grab access to that checklist, scroll down. Thank you, Tyler. It's very generous of you. And in summary, it's basically decreasing risk at every turn for the investor, ultimately, is what is going to create this higher multiple, easier due diligence, lower earnout, all of these things. It makes perfect sense. It's all a risk game for the investor at the end of the day.
And honestly, yeah, it's what's cool about it is, the way I explain it is, whether you want to sell or not, if you do all of these things, there's 18 total, like, you're going to have a better, more well-oiled machine anyways, whether you want to sell or not. So I think that's the way I look at it a lot of ways.
All wonderful advice and stuff that I completely agree with. Stamp of approval. Tyler, I would love to chat more, but I've got a bicycle ride scheduled, which is a bit of a random activity in the calendar. So before we wrap up, I want to make sure that you have a chance to talk about your new company that you're starting, because I think it's very interesting, very fascinating, and then make sure that everybody knows where to find you on the internet if they want to consume more of your content and learn more about how you think about business. So first and foremost, let's talk a little bit about your new company, tinywords.co.
Yeah, man, I appreciate it. So essentially, I'm circling back to the concept of creating a content agency, productized. It's going to be a little bit more tech enabled, but the idea behind it is literally right from Google Chrome, get matched with an industry specific human writer in less than 10 minutes with just one click from Google Chrome to write anything for your business. So that's kind of the core concept, which I'm pretty excited about, kind of working on and creating, and it'll be kind of also in the content writing space. So if that's interesting, or you want to learn more, tinywords.co, where we do have a beta list sign up at the moment that you can kind of check out. But that's kind of where focus and energy is kind of going right now. So I'm pretty excited about that.
Amazing. So we'll have that in the show notes. And then for anyone that wants to follow you, Tyler, and consume more of the content that you're creating out into the world, where should they find you?
Just Productized.Services. I got a weekly newsletter that I share as well for just helping people who want to productize. And that's free, and you can check that out. Yeah, just Productized.Services.
All right. So in the show notes, we'll have a link to tinywords.co, Productized.Services, and a link to this this nebulous list of checklist items if you want to set your business up to be either sellable or just way more fun to run. And I'll make sure that the team reaches out, Tyler, and grabs a copy of that, and so we can make sure that's there's a link to it in the show notes. So with that, I want to thank you very much for not only coming on for one episode, but what might end up being two, and staying late, Tyler. This was a really great conversation. I'm sure our listeners got lots from it, and really appreciate you making the time for us.
Hey, no problem, man. It was a pleasure. Thanks so much.
Well, that's all for today's episode. Be sure to subscribe to the show if you want to make sure to be kept up to date when we release a new show. And of course, check out parakeeto.com if you want to dive deeper into our library of resources to improve your profitability, including our free Agency Profitability Toolkit. And of course, if you got some value from today's episode and you think somebody else might benefit from hearing it, be sure to share it with them or leave us a review. All of those things help us impact more agency owners. So with that, thanks again for tuning in, and I'll see you on the next episode.